In May of 2020, CMHC came out with an absolute bombshell prediction that Canadian house prices were going to decline between 9 and 18%. And everybody went crazy because Canadian house prices never decline, right? At the time, while this seemed pretty pessimistic and a lot of people felt it was alarmist, there was some rationale behind it. You could see with an upcoming significant economic downturn, people being out of work for potentially a long period of time, that this would make sense. We'd see house prices decline. But since that prediction was made, we've seen house prices increase and monthly sales records get shattered through the summer. The real estate market heated up just like the summer heat. And then in September 2020, CMHC comes out with their current housing market analysis, and they say that they're standing by that prediction that house prices are going to decline between 9 and 18%. So in this episode of Bold Prairie Real Estate, we're breaking down CMHC's most recent housing market assessment, and we're going to see if we can get to the bottom of this. Hey everyone, welcome back to Bold Prairie Real Estate. If you're new here, my name is Matthew Pfeiffer. It's great to meet you. Now, I like doing videos that focus on the Canadian housing market, educating you about the Canadian real estate market and everything else in between. So if you want to become a more educated buyer and seller, or just like keeping up to date with my monthly market updates, go ahead, hit the subscribe button right now so you don't miss any of those. But as always, let's start this off with another terrible, bad dad joke. What's orange and sounds like a parrot? A carrot. CMHC just today released their most recent Canadian housing market assessment. Now, normally they do these every single quarter, and I was going to do one on their last video, or do a video on their last one, but they postponed it and never released any data. So it's been over 6 months since they've done one of these. Now, CMHC is very adamant that they stand behind their prediction that house prices in Canada are going to decline between 9 and 18%. But they've walked this back a little bit. They still say they're not ready to abandon their prediction, but in their original prediction, they said prices were going to decline 9 to 18% in the next 12 months. So that was in May when they made that prediction. And then prices were going to increase in the back half of 2021. Obviously, since they made that prediction, we've seen prices increase and sales go through the roof. We had one of the hottest summers we've ever had. So now they've changed their tune a little bit, and prices are still going to decline between 9 and 18% from peak to trough prices. But when that peak and trough happens, well, that's a little harder to predict. So they're not going to put timelines on that anymore, but we're still going to see prices decline between 9 and 18%. So what I want to do here is I want to break down all the different markets that I do in my Canadian real estate market update, which if you want to check it out and you haven't checked it out already, I'll put up a little card here for you so you can check it out, and I'll put the link in the description below. And a lot of you have asked for adding Victoria to the Canadian real estate market updates. So we're going to start this off looking at Victoria and go through from there. Okay, so let's get into breaking down this data. Now, this is being reported in September, but the data collection ended in June. So this is 3 months out of date when they published the report. So keep that in mind. We just had July was the busiest sales month ever in Canadian history. August was also very strong, and September so far has been looking fairly strong as well. So they don't have any of that data. This is finished off in June. Now, let's look through the different categories they've got and what they mean. The first one you've got here is overheating. So as prices continue to increase, we've got price acceleration, overvaluation, and overbuilding, and that leads to their overall assessment. So the squares, those are degree of vulnerability, and it's low, moderate, or high degrees of vulnerability. So let's look. I told you I was going to start in Victoria, but let's look at the national outlook, and then we'll get down into the individual cities. In Canada, September, they're looking at a low degree of overheating. You've got low degree of price acceleration. You have a moderate degree of overvaluation, a low degree of overbuilding, and their overall risk assessment or degree of vulnerability is moderate. So that's the Canadian average or Canadian outlook. Let's look through this. Let's get into Victoria. Okay, so let's start off with looking at the Victoria market, which will be in my next Canadian real estate market update. They're overheating. They're saying that right now there's a low degree of vulnerability. There's a low degree of vulnerability for price acceleration. There's a moderate degree of vulnerability for overvaluation of current prices. There's a low degree of vulnerability for overbuilding. Their overall assessment becomes moderate. One thing you can look at here, and this is going to be a lot of the charts, the sales to new listing ratio. You can see that it's been dropping here pretty much through 2020. And as it drops below 40%, that's when you start shifting into a buyer-centric market. So that's the outlook on Victoria. Let's continue on. Okay, diving into Vancouver now, obviously one of the most influential, important markets in Canada. And so you can also see here in these charts, they compare February 2020 to September 2020. Basically, they're comparing the first quarter of the year to the second quarter of the year. And you can see that overheating, that stayed the same at a low vulnerability to overheating. Price acceleration continued to be low. The overvaluation actually went from moderate to low. Overbuilding continued to stay at low. Their overall assessment continued to remain at moderate. So that's all interesting. Everything is in the low, and then their overall assessment becomes moderate. If you read through the data, you'll be able to get a better indication as to where they're nervous, and it really relies on they're nervous about employment opportunities and the sales to new listing ratio, and specifically what's going to happen in the condominium market there. So take a quick look at that if you want a deeper dive into that. So let's look at Edmonton now, and we're going to see kind of a whole bunch of status quo out of Edmonton. Overheating, which was low before, continues to stay at low. Price acceleration, low before, staying at low. Overvaluation, low before, staying at low. Overbuilding was moderate, it's going to stay at moderate. Their overall assessment is low. So basically with Edmonton, it's status quo. Let's go out to Calgary now, and again, this is going to sound kind of similar. Overheating was low, still is low. Price acceleration was low, still low. Overvaluation stayed flat again at low. Overbuilding was moderate, stayed at moderate. Their overall assessment with Calgary, again, is low degree of vulnerability, basically the same as Edmonton, status quo. Okay, so Saskatoon, you're going to see kind of low vulnerability in everything, and much like my hometown, Regina, you've gone through a number of years of corrections in Saskatoon. Prices have been on the decline basically since about 2012, much like Regina. And so what you're seeing is the results of that is low vulnerability across the board. So overheating, low. Price acceleration, low. Overvaluation, low. Overbuilding, low. Overall assessment is low vulnerability there. Okay, let's look at the best city in Canada, my hometown, Regina, Saskatchewan. And it doesn't surprise me, any of these stats here really. Overheating, low. Price acceleration, low. Overvaluation, low. Overbuilding, which was a high degree of vulnerability, has reduced now to a moderate degree. That doesn't surprise me in any way, shape, or form. New construction had pretty much come to a halt last year and into this year. There just wasn't the demand for it. And as such, there just isn't a ton of new home inventory out there to be bought. So that inventory number has been continuing to shrink, and that's why that risk level, vulnerability level has declined. Their overall assessment has actually improved from a moderate vulnerability to a low vulnerability. Winnipeg, where all my Winnipeg friends, they keep telling me the Winnipeg Blue Bombers are now the two-time defending Grey Cup champions. So we need to play a CFL season just so we can not call the Blue Bombers the defending Grey Cup champions anymore. I'm tired of it, but let's get into the data here. Overheating, low. Price acceleration, low. Overvaluation, low. Overbuilding, moderate. Overall assessment, low. So kind of status quo in Winnipeg here as well, except the Blue Bombers, you're not defending Grey Cup champs. Okay, so the big one, the city of Toronto. This is the entire Toronto area they're covering here. Obviously, Canada's biggest real estate market, one of the most important markets to watch for a national trend here. Let's get into it. So overheating was a moderate degree of vulnerability to start the year. That's declined to low. Price acceleration, again, was a moderate degree of vulnerability, has declined to low. Overvaluation was a low degree of vulnerability, continues to be low. Overbuilding, low, continues to be low. Their overall assessment, though, has continued to stay at moderate. Hey, here we are, the nation's capital, Ottawa. Now, Ottawa's been really hot recently, so looking at some of this data, it's kind of interesting to break it all down. Overheating, low to start the year, it's gone to moderate. Doesn't surprise me, they're seeing some overheating there. Prices have really started to increase. Again, price acceleration was a low degree of vulnerability, has increased to moderate. Again, we're seeing that throughout the summer, prices have increased in Ottawa. Overvaluation continues to stay low there. Overbuilding is also low. Their overall assessment does bump from low to a moderate degree of vulnerability. Okay, let's take a look at Montreal now. So overheating to start the year was a moderate degree of vulnerability, continues to be a moderate degree. Price acceleration, which was low, has now bumped into the moderate category. Overvaluation stays flat at low. Overbuilding stays low, and their overall assessment is a low degree of vulnerability. Okay, finishing things off in Halifax, where it's been a really hot market in Halifax for a number of months. So let's look at what CMHC's data has to say about that. Overheating was low and is still low. That's a little perplexing with the price increases they've seen there. So price acceleration, low and still low. Overvaluation was low and is now increased to a moderate degree of vulnerability. Overbuilding was low, continues to be low. Overall assessment was low, has now moved into the moderate degree of vulnerability. So a little interesting the way they're seeing the data compared to what's actually happening on the ground in Halifax. Okay, so I've got it all zoomed out here. You can take another look here at the national picture and all the individual cities. What I find very interesting is that CMHC is predicting these significant price declines, and yet every one of their categories is either low or moderate degree of vulnerability. Why isn't there a single category here that's listed as a high degree of vulnerability if we're expected to see these significant price declines like CMHC is claiming? Now, if you look in the bottom, very bottom, down low, you're gonna see here the September 2020 overvaluation ratings are based on preliminary estimates. So they don't have all their data in, this is preliminary, and they do adjust these over time as data becomes more available. But I just find it very interesting. CMHC is ringing the alarm bells, being very vocal about things, and yet their own data doesn't show a single category to have a high degree of vulnerability. So why hasn't the Canadian real estate market crashed yet? Well, I did an entire video dedicated to that topic, and really it boils down to supply and demand so far. The demand has outstripped supply, or at least matched it. We're not seeing the number of homes for sale continue to increase yet. So that's what's going on. But if you want to check the full breakdown, I'm going to put it right here so you can take a look at that entire video and my rationale for that. But CMHC, they are insistent. Prices are going to decline in Canada by 18%. That's that peak to trough price. It's going to happen. They're sticking by it. They're not ready to abandon that prediction yet. Their CEO even got in a Twitter war last month with a Vancouver real estate agent who disagreed with them. This behavior, I think, is rather perplexing. And I just can't put two and two together on this, where they're insistent this decline in house prices is going to happen. And yet, in all their data categories, not a single one of them shows a high degree of vulnerability. I just can't figure out how they managed to put those together. But they're insistent on it. They're not backing down from that right now. As we head into September and late October, the mortgage deferrals are ending, and we're going to see how many of these mortgages turn into mortgages in arrears. So that's people who have been unable to get back to paying their mortgages. As that number increases, if it does, you're going to see more pressure on sellers to get those places sold. You're also going to want to watch the sales to new listing ratio. As the number of sales declines and the new listings come up and that ratio drops below 40%, that's another indication of prices starting to decline, or they will decline in the future. So watch those two ratios, those two metrics. They're very important ones to watch. If you're looking for more information and you're a seller, I just started doing my whole seller breakdown. I'm going to have a series of videos right here that you can check out to help get your house sold. If you're a buyer, I have a fantastic series of videos dedicated to buyers. I'm going to put that up right there. That'll help you find that perfect house for a great price. As always though, guys, thank you very much for watching.